Welcome to the next episode of Navigating Carbon, your compass to carbon management. As always, I'm your host, Deb Ryan. And in this episode, I sat down with Chris Slater, CEO of Oka, the carbon insurance company. Chris and I talk about how and why he started Oka and why he chose to focus on carbon. This then led us to a conversation about how insurance really helps to build trust in the carbon markets and how it's bringing buyers back into the markets. Chris also talks exactly how they think about the project development cycle and where they think about where insurance plays, and then gives some really good examples of recent projects that they have insured. To make sure you stay on top of all of the upcoming episodes, make sure you like and subscribe to the channel. But for now, sit back and enjoy my conversation with Chris. Hey everyone, and welcome to the next episode of Navigating Carbon. Today I'm joined by Chris Slater. Chris, how are you?
I'm good. I'm good. Great to see you again, Deb.
Yeah, no, it really is. So you're the founder and CEO of a company called Okra. Explain to everybody like what you guys do and the space you play in this market.
Yeah, we've thanks for having me on. We've sort of come into the space with a very clear thesis that really that insurance is needed within the carbon markets and broader climate markets for these markets to scale. So, we started some research about 4 years ago. I'm an insurance geek. I've been building insurance businesses for a number of years, and about 4 years ago, we sort of looked at the carbon markets first of all and went, well, there's a fragility in the market because, all the issues that we know about, integrity, project failure in a number of areas. And we just sort of looked at it and said, look, if you could bring in the insurance capacity, insurance world into this market, then in some ways it will create liquidity, because in any other established market where capital flow, distributed, insurance plays a role in taking risk off the table. So
Yeah.
we stood up Oka as an insurer to really bring carbon insurance products and help the market scale. So we're 3 years in now, and starting to get some traction on that thesis.
Yeah. Well, and I think, that 3 or 4 year time frame in terms of like what's been going on in the carbon markets, like just talk about like how you're thinking around this evolved from sort of 22, 23 to now, with how the markets have been impacted because of things like integrity and, just this idea of risk for buyers.
Yeah. I mean, my original thesis was actually driven by a sort of compliance need. So I was looking at the SEC bills that were being passed, and where effectively this asset of carbon and was going to move from an environmental choice, and really it's going to then sit on the balance sheet, and it's going to be the remit of finance and compliance to go, okay, what are we purchasing in here, and how are we therefore protecting ourselves? So it was the issue of risk was just going to rise a level up, and it was going to become much more fundamental to both the purchasing decision of credits, but then how do we as corporates mitigate risk? So originally we were very focused on the US market. We were very focused on actually helping corporates protect their investments. And then, what's happened in the last 4 years since we started building out the business was, one, the voluntary market collapsed based on integrity issues around the market. We've got a new administration. We've got just geopolitical forces that have forced a bit of backlash against certainly on the voluntary side. So that thesis around compliance driving the need for insurance hasn't changed, though. And where it's actually moved towards, for us, where we start to get real great traction is in compliance markets. So, and we'll talk about it maybe later on the aviation scheme within Corsia. We're the first insurer to be approved. And it's now embedded in that system. You can't sell a credit to an airline unless your credits are insured. And I think that framework that we've worked on is an elegant one I think will be lifted and replicated in compliance markets on a country level or in other industries. But I also think it's a powerful architecture that can then be used in the voluntary market to also help the voluntary market scale. So thesis still very much the same. I think we've had to even though I've done this a couple of times before, we've had to pivot and change slightly how we think we're going to get there. But yeah, the opportunity is still there and starting to be proven out.
Yeah, I love that. And like, as you think about buyer confidence, and particularly think about corporates, like there's lots of different buyers in this market. Like, how do you think about the different buyers, whether it's companies or like institutional investors or private versus public and stuff like that. Like, do you see a difference across those groups in how they try and mitigate their risk when they're looking at credits and if they're, if they're looking for insurance and stuff as well as part of this?
Yeah, I mean, if I still go back to some of the early conversations I was having with corporates buying in the voluntary market, my that thesis that it was beginning, the element of risk was increasing because the issues that they were identifying were starting to get escalated. And I was like, well, they're going to obviously want to protect these investments. I think on the voluntary side, what we've seen is, so we've seen reduced appetite from buyers
Mm.
just generally. You've got one in Microsoft really trying to lead the market and then trying to drag and bring followers behind them to sort of,
Yeah.
whether it's in sort of the buying groups that they put together, which again I think is a healthy sign as some of the contracting improvements that have been made. So I think on the voluntary market, what we've seen is a reduction in the number of buyers, the elevation of what's the quality or integrity of credits that are required.
Mm.
I look at it, there's sort of two camps on the voluntary side. I think there's still very much the philanthropic, you know, we're doing it to do good. We're doing it to meet net zero goals. And maybe that's a little bit more subdued or a little bit more quiet, a little bit more private now. It will come back. The the world's burning. It's not, the steepness of the curve and the things that we need to do to address that is only getting steeper. So I think you've still got that, you know, philanthropic mindset of, okay, well, we're looking to do this because we just think it's the right thing. I think, unfortunately, in that sort of buyer group, the issues around risk, I say internally, you don't, if you're donating to a charity or a hospital, think about insuring that donation. Well, insurance just isn't, I think we've
Yeah,
learned,
that's true.
it doesn't form part of the narrative. It's like, well, do you know what, we're buying this because we think we can do good and we should do good. But I mean, maybe we were aware of and aware of the risks and we just onboard those risks. It's just part of the buying habit of being in the market. That's one group. But I think the more important group is those that are seeing this as and also as a precursor to some of that compliance thesis I've got, is that it's going to be a requisite. I firm belief that for us to deal with the issues of decarbonisation, it's going to have to be taxed. And in doing so, those that are institutions that are seeing it as an environmental asset, that are seeing it as a element either to get credit for from an environmental standpoint, from a tax break or a tax relief, or see it in the future as being something that they will have to do, otherwise they will have to pay a fine. Well, okay, that brings a very different group into that
Yeah.
mindset. That then starts to pull in also the speculators, the institutional buyers, the banks, the financiers. And I think that's on the voluntary side, that's sort of directly where we want to go. I think collectively we want to see more of that because that's going to drive the capital and the significant investment in the projects that we need. I think the catalyst for that would be more of these compliance schemes starting
Mm.
to, talk about aviation, but it could be in shipping, transportation, etc. And I think it's those buyers that then see the need for insurance very much top of the list because they will be buying insurance for a plethora of other things that they have to do, and they see it as an important part.
Which makes sense.
Yeah.
Yeah, and like you also mentioned in there, like this sort of second group who are thinking about carbon as an asset class. Like, talk about the value of insurance in terms of actually thinking about carbon as an asset class. Like, what is in your mind? Like, what is it? Like the insurance piece of that. Why does that enable companies to then start thinking about carbon credits as assets, not just certificates that they can retire and stuff like that?
Yeah. I mean, there's a plethora of benefits, Deb. I mean, we've got a interesting use case. We're working with a well capping developer at the moment who's identified that um, if they could sort of crystallize their credits that they're generating as an asset, then maybe they can get they can raise capital off the back of that. And I think that's a really interesting use case that you're sort of using this as a way of creating liquidity and
Mm.
creating finance flow and creating capital. There's some challenges to that. So there's we'll hopefully get into it here, but it's the legal rights and what is a carbon credit is still inconsistently defined across legislative frameworks across the world. So that there's that challenge to tackle, which is not insurmountable. And then there's a second part really around how does the financing, banking, and the insurance world come together to look at this as an asset in one way. We've we quite often seen as well, if I could wrap it with insurance, it takes away all the problems. And for many projects, as an example, that's quite often sort of venture risk that they're asking us to take. Can you ensure that if you can wrap our credits with insurance, then I can make sure I can give guarantees to buyers that, if anything goes wrong, then you're protected. Insurance doesn't play. Insurance plays a role much later in the development of a industry quite often and doesn't take venture risk.
Mm.
But in that example I gave, if you could protect this asset against certain things, and in doing so create the environmental attribute or asset that gives people the ability to lend against it, gives them more security to invest further in a project, as we're seeing with Corsia, gives developers an opportunity to access a market at a higher value, which drives more certainty, drives more persistency of the project. Well, that's a great result for all, I guess.
Yeah. So much to unpack in that. Like the piece around when insurance plays a role. I think this was something when you and I first met and were talking about it. It was something that really struck like I was sort of really thinking about you talking about this of like how Wes insurance does really help and like being very specific around that. And like I think you kind of talked about like it's not like you can go and insure forests and stuff broadly for like nature-based credits broadly, but it has to be very specific. Like talk about that kind of evolution as you've been talking to different people in the market around really educating people where insurance can play a role and what the timing of that is and type of projects and stuff like that.
Yeah, yeah. Um, I really look at it and a sort of like the life cycle of a project. And if I use again another sort of parallel, if you look at the life cycle of a construction project, which you know you're buying land, or acquiring, or reclaiming a property and raising finance off the back of that. In doing so, you're then bringing contractors in to build and scale this over a multi-year tenor. You're getting financing for that stage of the development. You're then sort of bringing this project, be it let's say it's a hotel, and in New York, you're bringing that then to market, and you've got secondary sales, and you've got the insurance of that asset once it's then been created. There's a whole life cycle of this project, and insurance plays a role at many different stages of that. Ensures the contractors in there, ensures the viability of the project. To work on the construction, you need a guarantee that you provide sort of as a surety to the developers. The bankers and financiers get insurance for the loans that they're putting in. It plays a role in just many different parts around that ecosystem of the project. If we translate that to carbon, it's how the market is evolving is in that way. But it's 3 or 4 years ago, before no insurance existed, it was I think we were all naive really to how insurance could play a role. But what it started to happen is, at the f- at the at the initial funding of a project, we quite often asked to be brought in and try and protect against the delivery risk of this project. Will this project ultimately, will these trees grow? Will the carbon get sequestered? And in 40 years' time, will it be permanent then for another 100 years? That's a really difficult place for insurance to play a role. And it's venture risk, I describe as. It's like
Yeah.
there's still
Makes sense.
viability of the project developer, viability of the project, viability of the methodology. There's just loads of like venture stuff in there. But as the project matures and as it gets through various stages, then you can start to see insurance playing a role. The
Mm.
balance strength of the developer increasing, the specific perils around, is there natural perils that might affect the projects that you could take off the table. In contracting, is there warranties that you're having to give to a buyer that you could take off? And then ultimately, when the credits get issued, can you protect those credits so that if something happens to the project after the event, that the invalidation doesn't affect the environmental credibility of the buying of the credit? So I think the insurance opportunity sits along that life cycle at different points. I think we're still seeing how that, as the market scales, how insurance can unlock more transactions and more flow at those points.
And I assume that as you are working with, and we'll talk about some of the folks and the different registries you're working with here in a sec. So I assume that as you guys are looking at different projects, different developers, different types of credits, that kind of stuff, are you just then choosing like which piece of that you're going to insure? Or are there some projects that you're doing the whole piece of it? Like, how do you kind of differentiate that in terms of which bit you're going to, you know, tackle and actually put a stamp on essentially?
Yeah, no, great question. And I think the ambition is really to cover, across the life cycle for all projects. But when sort of 3 or 4 years ago, I think where we've ended up gravitating towards, I mean, pulled towards, is where the the buyer of the insurance sees the value. So
Mm.
whether it's a Corsia where it's embedded into the registry architecture now, so that the value there is that, well, ICAO has mandated that this political risk needs to be dealt with. So it's very clear, very specific. We take it off the table, and it's an enabler for developers to sell credits ahead of them getting correspondingly adjusted. Great use case. It's
Mm.
very specific and works in a very specific part of the life cycle. It it's rare we would work across the entire life cycle for a project, and I sort of I think where we've ended up at the moment, and this will change as the market more matures, is we're looking at more around insuring the asset. So we're
Okay.
insuring credit or ensuring the project in some way. We're trying to avoid ensuring the viability or the credit risk of the project because
Okay.
unfortunately for many of these projects, small bumps in the road, then they fall over, and
Yeah.
we don't want to be left with the sort of as the backstop for the market if these projects
Yeah.
don't survive. So yeah, we're sort of more at the sort of latter end of projects, I think, in terms of where we're really the value of our products are starting to work.
So a good way to maybe think about it, if I'm like, it's more that like risk of reversal almost, right? Like once the credit's been generated, that you guys can come in and be like, okay, well, we're sort of ensuring the permanence piece, which I know has been a huge conversation in the market. Is that a good way to understand it?
Yeah, exactly. The invalidation of the credit for some
It's a
reason.
claim. Yeah.
Exactly.
Yeah.
It's almost I've had this like an insured credit once it's sold is going to be more valuable than an uninsured one, and
Yep.
and and because it gives those protections, and it therefore gives for the developers and the buyers and the registries that integrity element of no, it is what it says on the tin. It's a ton of
It
carbon.
is. Yeah.
Yeah.
So let's talk about the work that you've been doing with Corsia. And like, you've talked about the importance of, I think Corsia has, personally, I think it has the ability for us to really think about how this market's going to evolve, with standards and things like that, both on the credit side, but also the emissions piece because of SAF and emission reduction and stuff. So like just talk about that evolution of how you guys are working with them, what it means to be associated with the Corsia eligible credit, like as a registry, and insurance around that. Yeah, really curious to dive in there a little bit more.
Yeah. If you listeners will bear with me just for a moment, just to
Yeah.
take a back step as to how it sort of emerged. I mean, obviously, the aviation scheme has been in design for many years. I think it's 2016 that really the sort of establishment across all international airlines. And we've been working towards the sort of compliance date, which is 2027. Actually, it'll be January 2028 when all international airlines will need to meet their decarbonisation goals, 85% of 2019 levels. In doing so, there's a number of things that they could be doing. They could be internally decarbonising. They could be, buying SAF. But you know, there's quite a big gap estimate, sort of 150 to 200 million tons for the first phase as we go into the compliance period next year. Um, that can only really be met by purchasing a carbon credit and offsetting those emissions. So, um, really, what ICAO did a couple of years ago was identify a double counting risk, which existed in the carbon markets for years, but they've said we want airlines to buy credits and not have to deal with any of the risks that existed. We want to
Mhm.
be compliant. I want to be able to retire and not have to deal with this. So you carbon market needs to solve this issue. Great. Very clear risk, very clear issue for any of the standards bodies. If they want to be approved, they need to solve this issue. Some of them, like Archies, have done what the registries have done for many years. They've gone, okay, well, we've got a buffer pool that solves it. Completely inadequate, inefficient, ineffective way of using capital. Needs to be changed at a fundamental level moving forward. But what we've done is we built a product specifically for this, actually serving a different purpose. But because we built the product, we then worked with Gold Standard and Vera over the last 18 months to 2 years to say, here, if you introduce this into the architectural design here, that you mandate it for developers to hold this insurance product, that means you can obviously get approved by ICAO, but also provide that confidence into the architecture and system so that airline buys credit, something happens that invalidates that credit. It's a political risk issue. Insurer pays developer, developer replaces credit. You're maintaining the environmental integrity of the system. So it's been beautifully designed, not without its headaches and not without many conversations and the registries having to get familiar with how the insurance industry can play a role. And we're just a catalyst. I don't expect us to be the only
Mhm.
one in there. We're not at the moment, and I expect more to come in. But it can really play a fundamental role of dealing with that issue and ensuring that from a compliance standpoint, the buyers don't have to worry about it. It's
Yeah.
just, my part now is really educating airlines in that in this scheme, you don't have to worry about these issues. There are
Yeah.
other issues you might want to do. Is the developer going to give you the credits over time or the broker that you're working with? But specifically for this political risk issue, and we've taken it off the table.
Yeah. And I think it really goes to what you were talking about, where it has to be, you guys have to have a very specific thing that you are essentially de-risking and addressing versus just this like broad swath of, airlines buying credits, right? Like, which is just too broad.
Exactly.
Um, I love that. So let's talk about, so one of the other recent projects there was an announcement around was Oka's insurance of 1089's credits. I had Luke, the CEO of 1089 on.
Yep.
Um, couple of months ago, like,
Yep.
just talking about the evolution of that, because that one's very much around the actual credit itself and kind of what you were talking about earlier. So yeah, just give everyone a little bit of an overview and a flavor of that.
Yeah, great team. And I love what they're doing in terms of building, again, the sort of um, infrastructure that's required for the market to scale. And the problem that they were coming to us with, which we've seen before and has been our thesis, is that, again, back to this, if something goes wrong, who bears responsibility? And how do we take that responsibility away so that the buyer of these credits can basically be confident that the integrity of them and they can use them basically for their environmental needs. So the work we did with 1089 was really looking at where does the risks exist again around the invalidation of these credits around the biofuels. So we got a test mixer that is producing credits on their platform. These the process of auditing and issuing these credits onto the blockchain is a process in itself, and there's subject to potential errors or potential emissions. So that as you then go through auditing cycles and you look back and go, was it mixed correctly? Was the right levels included? The carbon credits that have been generated, do they match to a ton of CO2? If there's any discrepancy in there, effectively our insurance pays out. And it pays
Mm.
out so that, again, whoever's bought the credits downstream, be that a transportation company or somebody else, can go, well, okay, we bought, and we can uphold the fact that they are a ton is a ton is a ton. Because behind the scenes, what we've done with the 1089 is ensured that those credits are replaced and the environmental integrity again is maintained. So it's around that. There's an issue that no, all risks can't be managed away. So
No.
what's the risk that can be identified? Can we model it from an underwriting standpoint? We can. We can price it. We can embed the insurance in there. If something goes wrong, then we pay out.
Yeah.
So yeah, again, another
Yeah.
elegant way of solving a problem.
I'm really curious. So again, I'm going to pull out some key things you talked about there, but we'll stay with 1089 for a second. So they're creating essentially an engineered solution. They're looking at biofuels blending and fuels blending generally to look at what's the reduction from a traditional fossil fuel. Um, it's an engineered solution. And you talked a little bit about like the buffer pools for the environmental things and stuff like that. Do you feel like insurance will only play a role with some of these ones that are sort of more engineered solutions and stuff that have very tangible methodologies and stuff that, the nature-based solutions that's where we saw a lot of criticism,
Yeah.
23, 24 and stuff like that. Like, do you think nature-based solutions will get there? Like, I don't know. I'm curious as like how you think this will evolve and stuff like that. I don't know. I'm just broadly kind of
Oh,
curious more than anything else.
it's a big question, isn't it? So
Yeah.
if I'll answer it in a couple of ways. Firstly, with my insurance hat on, the engineered solutions end up being a lot more straightforward because it's a it's a insurance is around the data. Can you model the risk? Can you price the risk of something happening? And then can you do that to a point where you can obviously generate profits out of the back of insuring less than or paying out less than you actually taking in premium. So with engineered solutions, the monitoring and measurement, if I look at projects that we've been working in well capping, in DAC, in
Mm.
biofuels, like it's an assessment and measurement perspective. So we end up gravitating towards them because of the model that we've built and the way that risk can be modeled a lot easier, and therefore that ultimately goes to price because
Yes.
there's less uncertainty, and therefore it becomes really efficient and effective for an insurance solution. When you then start blowing that out onto the into the environmental areas and you start to look at nature, there's just a lot more unpredictability,
Mm.
and a lot less data. Data is improving, monitoring measurement of biomass and tree growth, etc. So it's getting better, but still the error rate's quite high, I think,
Mm.
on the insurance side. So you end up just with a uncertainty for premium that then gets built into there, and that then starts to make it slightly unpalatable. So
Mm.
that doesn't mean that it can't be solved, and the data will get better. And I think insurance can play a role across all. Um, that's my insurance hat
Yeah.
on.
Well,
On
and
the
it goes to how important data quality is. Like, it's something that gets talked about across the carbon accounting spectrum, full stop, is data quality. And so it's again, to your point, as it gets better, like, it's not that it's not a no, but it's just it's something that comes up. I hear it all the time around the entire carbon accounting space. Anyway, just to sort of
exactly, and the error rate will tend to zero. So
yeah.
your measurement of biomass will have errors in it, and the technology will improve and the measurement will improve, and then therefore the issues and errors will reduce over time. Never get to zero, but it will. But yeah, exactly that. So I think
Mm.
on nature that's getting better. I think part of the challenge for the carbon markets generally is I'm going to raise it, but it's tenor and permanence promises,
Mm.
and that's the so when this sort of like removals versus avoidance or nature versus engineered that the market seems to have, I've not been in it for that long, so I can't be really part of it, but they seem to have battled against each other almost. And it's clearly all of it. Like we need all of those solutions working at pace, rather than it's not a choice. But I do think in terms of my own view, in terms of how capital will flow into these, you will only get institutional capital to play where the measurement of uh, the risk rewards is clearly defined or more clearly defined. And I think
Mm.
with nature, let's take a forest, it's just, it's over a very long tenure, matching that asset to a long-term liability. Yes, it could work for pension funds and direction of capital. So I think there's a model there, but I think it's going to have to get a lot better. And back to my philanthropic, I see this sort of protection of nature, that sort of capital flow can be much more from that direction, from those
Mm.
that
I see.
see it as an asset that can generate returns out of the back end, just because the variability is too high.
Mm.
So yeah, that sort of
I
that
love that.
bifurcation in my mind is more from a where investment flow might go, rather than and permanence is key.
Well, and I know something you and I've talked about, and it's come up when I've had other permanence conversations. Teresa, my co-host of Common Ground, and I did a whole episode on permanence. It was like an hour long, and it's one of our most viewed podcasts. It's such a big issue. Like, talk about in from the insurance perspective, this whole perfect versus like the perfection paralysis that goes on with, and you sort of alluded to some of that when you were just talking about it. But as you think about it from an insurance point of view, or even just a market point of view, like, how do you think that hurts? Or, where do you think we need to get standardization? Or, yeah, like, it's an interesting kind of balance in that one. Curious as to your thoughts.
Yeah. Um, I mean, first of all, the insurance industry can't play over life cycles of 1,000 years permanence, or even 100 years, or even take it down to 40 years. So it's almost nonsensical to think that our industry can play a role in there. What it
Mhm.
needs, what we end up doing is, well, can we break it down? Can we do the first 3 years? And can we? I'm a pragmatist, so sort of some of that is just my approach to problem solving. But okay, if you can't guarantee the permanence for 40 years, if we could introduce insurance to do it for the first 3 years, does that help? Does that move us forward? I think it does in some ways. But some of these numbers are just made up. I mean, just generally. I mean, they're I know that's, and I've been listening to the episode. There'll be scientists listening and be like that, who'll be pulling their hair out. But the point you made around perfection being the enemy of good, we will not have planet to live on if we don't make progress towards solving some of these problems. Progress can only be made, in my view, through pragmatic, iterative solutions. So if we means that we can get carbon to be stored for the next 15 years and we can guarantee that, well, guess what? It buys us more time, and in 15 years' time we'll do it again. So that that has to be the mental model, I think, for permanence within the market. I think until we deal with some of that, the debates around the science around whether enhanced rock weathering is going to be stored in the rock for millennia or not. I mean, it's wasted. It's wasted airspace in my mind. It's
Well, and you and I aren't going to be around in millennia to check, right? Like
exactly.
we're probably, like 50 years is probably a stretch. And if I'm still doing this in 50 years,
Yeah.
like, I'll be very tired and very old.
Yeah.
uh, but yeah, so a few more things before we wrap. One of the other things that you've mentioned, and it's sort of been an underlying key piece actually through all of the stuff you've said around starting with the compliance piece, and even the stuff with the registries, was the question around audit, and the role that insurance plays almost for then companies around audit. Because I think, and correct me if I'm wrong, as we start to see more corporate reporting required, I know in the US it's not, but in the EU it is, in Australia, in other parts of the world, that's a thing now.
Yeah.
And then the double counting piece in the carbon markets has always been a piece around like, how do we audit this and make sure we're not double counting and stuff? Like, how do you view that kind of audit perspective and the need? Like, we're going to see this huge uptick in need for audit as there is more reporting and stuff like that. I'm just kind of curious as to your thoughts on that, because it does, like I said, it seems to be a key theme in all the pieces that you've been looking at and the whole thesis. So,
Yeah. Yeah. I'm just waiting to pick up a report on a claim being brought by
mm,
somebody, one party against the next, where there was a promise in a contract that it would do X, and you could see a world where that's brought against the registries in the not too distant future, where we've had multiple incidents where the integrity and the validity of the credits has been set by one party or another, and the liability of that just gets passed around. Uh,
mm,
I think for the market to scale, the clear association and attribution of liability to parties needs to be much clearly set. There's been too much crossover, too many conflicts of interest around who does what,
mm,
what should I be doing. We've been asked, you should buy and sell credits because you understand which credits are insurable. And I'm like, stay in your lane. I'm an insurance business. I'm in here to write the
yeah,
insurance and protect the risk. You're a registry. You're in here to basically issue credits, be the platform for transactions. Okay, you're a standards body. Well, you set the methodologies that should be adopted and adapted. You're a financier. But these things sort of get blended in the carbon market, and it's the evidence of a new and novel market and an unregulated market that those things happen. For back to your question around audit, so as things start to get audited more, as the assessment of this and the liabilities start to climb and start to increase, then claims will be brought off the back of these
mm,
audits. And those that are thinking forward around protecting what might happen will be buying insurance, and those that aren't will be subject to claims which are going to hurt. So yeah, I think direction, that's exactly. And you're almost seeing it there in some of the compliance markets that are introducing, in Alberta, for example, there's, very, very strict, it's a very small market, but very strict rules around an auditing and invalidation of credits. There's an ecosystem there that really works effectively. So yeah.
it's going to be an interesting pace as more and more countries require corporate disclosures, but we're also looking at like asset level carbon pricing and some of this kind of stuff as well, with all of that. So as we kind of wrap, what's on your radar? Like what sort of things do you think, what are you really excited about, that's coming down the pipeline, or maybe even not excited about? Like what things are you concerned about that might like hold some of this stuff up? I don't know, like what's on your radar, Chris, for this year? Like
Good. I mean, I'm an optimist at heart. I think you have to be to start businesses. So I'll speak less of the worries. Though I'm always looking around the corner to what might impact the business as we.
You're an insurance guy. Of
I'm
course
an
you are.
insurance guy. You got to do a bit of that exactly.
Yeah.
Um, I'm optimistic about the the rollout of compliance schemes and the inclusion of carbon and carbon projects and credits within those schemes. So, lots of people talk about Singapore and carbon tax in South Africa, and that's all great. I think being out in Japan earlier this year, it's nascent and new, but the compliance regulations that are being set there for carbon, I think, is great. Look at the EU. I mean, they're it's for 2040. I think again, carbon credits can be used as part of the largest compliance scheme globally. I mean, these are heavyweight policies that are now being negotiated and looking to be pushed through against a backlash of geopolitical mood that is against some of that. But I
Yeah.
think that's going to swing. I think governments are seeing the impact of the world falling apart on them, on their balance sheet and on the finances. Now it's starting to hit them, then action will be taken. So I'm optimistic that for the carbon market, there's finance that will flow into this market. The question is when, really, and
Mm.
how soon. When it ends up being policy led, it ends up taking quite a long time. But you know, we've got all the solutions available to us. So I think we need policymakers, we need regulators, and we're seeing it. I think just they're layering one over another. Colombia compliance market, Mexico starting to put stuff in, Japan. So that groundswell is just going to build, 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 and ultimately, then when I went out to see a carbon project in Rwanda last year, and you're seeing the impact of releasing cook stoves into the communities, impact it has on a family. That is where it's going to have the impact, and that's
Mm.
what I'm excited for.
I love that. Chris, this has been an absolute pleasure. Thank you so much for joining me today.
Yeah, no, I really appreciate it. Thanks for having me on, Deb.
Thanks.